Good morning, everyone. How are you?
Happy day after the election. Let's admit Bill. Can y'all hear us?
Yep.
Yes.
Okay, good.
We're good.
Since we don't have a speaker this morning, we haven't tested our speakers yet. So we're glad y'all are here.
Yes, so glad. And we are, I guess we were hoping that we would have an answer by this morning, but we don't. So we'll just kind of talk very vaguely about what typically happens in an investment in a year where there's an election. We can talk about the mistakes that we've seen people make over the years, and then hopefully open it up to questions. We're hoping it will be a very interactive session, given that it's such a hot topic. So the markets are up today, let's say that. Markets really, really like certainty. That's a big thing. But what I would say first is, and I don't know if you've been following our story on Instagram, but generally people feel like markets really care about politics, and I can say they don't. They do care about policy to some degree, but they really don't care about politics. They don't care who's in office. Temporarily, that's not true. Long term, that has absolutely been true. So I think a lot of times because it's so loud and busy in a political season that you start to feel extreme discomfort about the State of the Union, about the state of companies, you start like putting a lot of eggs in different baskets where they shouldn't be. Anyway, so that's what I would say is like an opening remark on politics and markets. It's really hard because people, particularly this election, last election, you felt polarized from your friends. You felt it just feels awkward. There's just all this around politics that really just has nothing to do with the markets. So I think I would say that first is that like when we're in a season, in an election season, you can always expect volatility because the markets do, like we said, they hate uncertainty. So I'd say that first. Would you have anything to add?
Yeah, no, I'll say that I really like that concept just because coming into the financial world as an attorney and like now like really digging in, that's one of the things that's been so fascinating to me is that the market, like what's going on right now is not necessarily as a result of the election, it's just as a result of uncertainty and how just if you look at the past behavior of the market, how once the president is elected, no matter which one it is, that it then stabilizes. And also just the other factors that go into it. And Lauren, I'd love to hear your thoughts on this about how so many people, and we'll talk about this later in a few of the other mistakes, but that people have pulled their money out of the market and are holding it in cash. And then once the presidential election is decided and people begin putting their money back in the market, what do you see happens there?
It just never works. I mean, I don't even know another way to say it. I used to be much nicer about this concept and be like, yeah, you need to do what you want. And now it's like after seeing so many elections in my career, I'm like, it never works. People never know when to put their money back in the market because none of us have a crystal ball. Like I don't have one. To my knowledge, Emily doesn't have one. You know, the closest person I think to having a crystal ball is my mom, but not about the markets, just about life. And, you know, it just is, it just doesn't work. Whenever we have private clients come in to see us, what I tell them is I've only seen people lose money 3 ways. 1, spending too much money. That we cannot help with. That's something that we can help you with here at the Wealth Edit because we talk about it a lot, purposeful spending, making sure that you understand how to prioritize what's important to you in life so you can enjoy your money. So maybe you're tempted not to spend as much. The second is changing strategies, kind of like catching the next shiny object or chasing after a shiny object. So if ETFs or exchange traded funds are in vogue this year, you want to do that. If gold is in vogue next year, you want to do that. These are just examples. That never works either, because you've already, by the time you're chasing that thing, it's gone and there's something else to chase, and you won't ever hit the upside. Or if you do, it's just because you're lucky, which people are lucky for multiple reasons all the time, that have nothing to do with whether they're chasing flashy objects or not. The third is going to cash. And the main reason is because, now let me tell you, if you have something big that is coming up in the next 18 to 24 months, this is a general rule. This isn't personalized financial advice. This is what we would tell anybody that we met off the street. If you have something that you really need a lot of your cash for in the next 18, 24 months, let me think of a good example, like college savings, for example. You want to keep a lot of that very, very safe, because it's a very short-term need that you have to satisfy with cash. Other than that kind of situation, in which case we highly recommend you keep that, or not recommend, but like you should really consider keeping that in cash. I mean, that makes sense, right? Like you need to buy something, you need to pay with that with cash. That's just common sense. When people try to control what they can't control through cash, it often doesn't work. And it's not so much pulling out of the market, even though I disagree with that, because statistically, some of the best days in the market when times are volatile or tough come after some of the worst days in the market. So if you miss those, you just miss them. But the main reason is people don't know when to put it back in. So whenever somebody comes to us and they're like, I'm just too scared, I've got to put my money in cash, what I say is, what day are you buying back in? They never know. And a lot of times if we do pick a day, which I really push people to do, then when we get to that day, they don't want to do it because there's something new to be scared of. And that's just the deal. I mean, that's what I would say there. But those are the three ways that I've seen people really botch up their wealth planning.
Yeah. One of the things that we've been talking about with our clients recently that I think people would love to hear about is how cash actually is not risk-free. So many people think cash is risk-free, and that is not the case.
Right. I would say so cash, if you look at it in relationship to other currencies, have values that fluctuate. So cash makes us feel very safe because we can see it, we can use it. It makes us feel there's a comfort there. But in reality, currencies have rates of return as well. And the US dollar has a rate of return. This year it's down something like 6% last time I checked. So if you're in cash, while you feel like you haven't lost anything, you have. And that goes for, that's just one of those concepts. We can maybe spend another Wealth Edit Wednesday talking about that. But I think you're right, Emily. I mean, it's like people don't think about the fact that if you're in cash, currency has a rate of return, and then also inflation, even if it's very low, like what we're in right now. If you're in cash, you're not keeping up with inflation. It's just a fact. So unless you're earning more, in which case, hey, it's very, very difficult to go to cash and have a successful wealth outcome, unless you're very overfunded, in which case, hey, like I am all for taking the least amount of risk that you possibly can take in order to achieve your lifestyle goals. That sounds awesome to me. For lots of us, being cash is not going to work out that well.
Mm-hmm. So what, if you're looking at the market today and it's gone up, what do you think is going to happen when they do announce the president? Like what does it, if you look at what's happened in the past, generally the last quarter or after November and December after a presidential election, the stock market actually improves.
Yeah.
The returns are greater.
I mean, I would say that is true. Historically, in election years, the market is up just because the market likes certainty. Now, I will say this. In the past little while, the elections for, Obama, Trump, those haven't followed like the exact historical patterns. So we may be creating new patterns right now. We of course won't know until we're talking about this 20 years from now. but that, it's something to at least watch and consider, I would say, is how, but I think that what we can say is that like good companies are good companies are good companies. If you're investing in good companies with strong balance sheets, just long term, those companies are going to do well. That's just the way it goes. Short term, they might have problems based on different things. But again, these are factors that are well beyond just what's happening in the political landscape in the United States, because people in, a foreign country are still drinking Coca-Cola or drinking, and that's not a recommendation, it's just the truth. There are people consuming goods and services all across the world right now, and really they might be casually thinking about the United States, but we're just not at the top of their mind and when they're making decisions, which is good for us, and it's good for American companies that are global in nature. So I'd say that's a good thing. I think that it's very difficult. What we forget in US politics is like, it's very, or we all know this to some degree, if we're being honest, like it's real difficult to get anything done unless it's straight line red or straight line blue. So from a policy standpoint, it's just very, very difficult. We don't know what's going to happen. So maybe a week from now, I'll have more things to say about this, or we'll have more things to say. But if we look historically, and do you have that chart? Maybe we can figure out how to share. We found this awesome chart on this article. We'll post it on the Mighty Networks after this call.
Share screen. Sorry.
So we can't do it on this call, but what we'll do is right after this, we're going to post this on Mighty Networks. But there's this really awesome chart that kind of talks about red and blue, and it tracks what the market has done over time. And you'll see that generally the growth of a hypothetical $1,000 investment in the S&P 500 index has little to do with which policy has been, or which party has been in office. Like when they're blue, the market's gone up. When it's red, the market's gone up. Truly. I mean, it's kind of amazing to watch it and put it in this context. So we'll share that after the call.
I love this stat that they give. They say that $1,000 invested in the S&P 500 when Franklin D. Roosevelt took office would be now worth over $14 million today. And and this is what the chart shows, that during that time, there have been exactly 7 Democratic presidents and 7 Republican presidents. And it just shows that the market has consistently trended upwards despite who was in office.
And it's just something to keep in mind, because it feels like, we kind of started the call, it feels so real right now, like everything is going to change if, so-and-so takes office or so-and-so takes office. And the fact is that from a market standpoint, chances are, if we're looking at history, which is certainly no indication of what happens in the future, historically, nothing has changed. The market has continued to grow over time. And so as good investors, we kind of know what to do with that information.
And if anybody has any questions, y'all, please use the chat feature or take your line off mute.
Wealth Edit.
But I think one thing that we can talk to while people unmute their lines, again, y'all feel free to ask questions, is how important the planning aspect is to people. Because so much is, and we put this on our story, is a long-term plan and to sticking to that plan, and how important it is to, like, when you meet with an advisor, and what we hope we're like encouraging thought around is like, what are your long-term goals and how do you want to get there? Because, and that's just so very helpful when you've got all this time of uncertainty, when you've already kind of thought through those long-term plans. You've made your own personal financial plan based on those, but also understanding that the market is volatile. But having that confidence, okay, I've already thought through this, I've already made my plan, I'm going to stick to my plan, and I think this is important.
That's right. Yeah, I mean, we went through in stories just like a series of, I mean, the first thing is, I think some people feel really uncomfortable because they haven't made a plan. that is definitely a conversation too for a different day, particularly in a household where, you're married or you have someone else to consider. A lot of times one spouse may devalue the idea of planning or think like performance related returns are planning, which those are two separate things. And so often talking to a spouse about getting a plan can be somewhat uncomfortable. And so if you're in that situation, I'd say like maybe pitch it. We talked about this on one of our wealth pods and came up with a good plan. But like if your spouse is just kind of like not willing to do that for whatever reason, then I'd say like one thing that you can do that can be helpful is just say, hey, you know what, like, I just want to understand our financial strategy. If you use the word strategy versus plan, sometimes with men that works out better. I don't know why that is. I mean, don't share this podcast. It's a secret. But I would say that that's a good thing to do. So I think a lot of discomfort comes from the fact that there's just not a plan. But if you do have a plan and nothing has changed, then just revisit it. I mean, sometimes it's like call whoever your planner is and just say, hey, I know nothing's changed, but like, can you just make me feel better? We love calls like that. When our private clients call us and say like, I'm nervous, I want to understand what's happening. It's never putting us out. It's never something that we don't want to talk about. Like we want to talk to people when they're nervous. That's where we feel like a lot of our value comes from. And your planner will feel that way about you too. And if you don't have a planner and you're a member of the Wealth Hut, obviously you're here, don't forget about our relationship with Facet Wealth. They are awesome and really good partners in this, and they want to answer these questions too. So I'd say that. And then if you do have something that's changed in your plan, definitely tell your planner that too, because they can walk through whatever you need done and make sure that everything is going the way it should be. So anyway, I think we have a question.
Yeah. Okay. So Jessica asked a great question, and I actually read this article as well. So this is a good one. She says, yesterday I read an article that said the markets would predict a Biden win because they were down. And historically, an incumbent has never been reelected when the markets are down before the election. Mm-hmm. However, I also saw yesterday that markets were up, and that should predict a win for the incumbent. What are your thoughts on the markets predicting this, and what news sources do you find reliable enough about the markets that won't be so politically skewed? It seems unlikely that either of these sources used could have been reliable considering the two extremes. I think that's the point.
That's the point.
Nobody knows.
You nailed it. I mean, and I think that that's true. Like social media is really changing the way that we receive news, information, and there's a lot of burden on us to figure out what is true, what is not true, what is skewed, what is not skewed. Because like, quite frankly, if I was just paying attention to my social media, I would think that Biden would have won by a landslide. Like that's what my social media said to me. That doesn't have anything. We don't care who anybody votes for. We don't care who each other votes for. Like that's not the point. The point is that news is sometimes skewed, and how you sort through that is really, really hard right now. I think that internet ethics are at an all-time low, and that is something that I'm optimistic that will change over the next 10 years, just with awareness that the internet actually has ethics. Or if they don't, they should. So anyway, but I think you're right, and I think that that's partly why some of the data that has consistently worked in the past doesn't work right now, because we have so many new information sources, and we can actually sift through, or analytics choose for us what we think we are. And so then you get more and more and more of that information. It really makes kind of that historical data capture, and like comparison, where I just think we're creating new normals right now. And so there's really no way to tell, is what I would say.
And it kind of brings you back to the point, and also to Carrie's question next about how important it is to invest in those the stocks in the companies that are strong, healthy companies. Mm-hmm. All right, Carrie asked, just out of curiosity, apart from the election, what are other examples of clients being anxious and wanting to pull out of the market? This happens all the time.
Yeah, I mean, it can be anything. Coronavirus. It could be Meredith Whitney in 2011 saying bonds are going down forever. It could be someone on TV. I mean, we really are, like the media captures our attention through fear. And so a lot of times people come to us and just say, I am so nervous. I read this. I heard this. Life is never going to be the same. I mean, that is what I've heard truly. The From 2008, when I really entered in 2007. In September, October was the last peak of the market. Then it just went down slowly, steadily till March of 2009. Until probably 2014, 15, people are like, it's just never going to be the same. It's never going to be as good. And the whole time, the market was going like this. Bull markets, those are markets that are going up. They really like that kind of quiet fear. They can build on that very thoughtfully over time. And that's what we saw from like 2009 and beyond. They like that kind of like quiet hesitancy because not everyone is coming in the market. Not everyone is confident. So, it really could be a number of things. It could be, we might be in a war with who knows what country, fill in the blank. I've heard that trade talks are down with so-and-so. I mean, anything that you hear on the news, it could just trigger people, and it triggers people differently. But the people that are scared, I will say, tend to kind of habitually be scared. So it could be coronavirus now, it could be trade wars tomorrow, it could be, we just don't know what the next thing is. So.
All right. Catherine has a great suggestion. So she says, similar to what we're discussing here, from a news standpoint, we've stopped watching traditional networks for news and just watch a morning financial show and get our news that way.
Yeah.
It's so much more optimistic and level-headed. We get the overall facts and all the opinions on politics.
I think that's a great one.
Yeah.
I mean,
I do love the ones that have no opinion. They just tell you what's going on.
It's so hard to find them too. I mean, it really is very difficult to find news sources without some sort of political bend. Gosh, I think we all need that. I think we all would be much more on the same page.
Yeah. All right. Does anybody have any other questions?
All right. Well, hopefully this is time well spent. I'm sure it's going to be at the forefront of everyone's mind until we have decisions. But anyway, we're grateful for you all, and thank you so much.
All right. Thanks. Y'all have a great day.
Bye.
Bye.